please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So it's looking better for the market actually. Mid-caps were always flying around. That index continues to be on the higher side of the screen. And some more stocks that are now catching the eye. Let's pull up a Satin Credit Care, for instance. That's a stock that's now sitting on 5% sort of an up move. Some buying on a Nagarjuna Fertilizers is visible. And I think I saw Career Point also move higher. So individual stocks continue to do their thing. Let's bring in Ashwani Gujral as well as Rajat Bose to get some trading ideas going. Ashwani, good afternoon. What do you make of things as we stand right now? What's the index call?
I think at 10:30 I told Nigel that we were filling up gas. So now the car is moving. Yeah. I think particularly I'm very interested in the bank Nifty, where I believe there'll be a lot of short covering because it hit 560 twice, and from there it's had a large bounce back. All the smaller banks are up, but I think if ICICI Bank and Axis Bank, chances are they will also participate as the day goes by. And finally, you'll have a bigger rally on the bank Nifty. It's already recovered 100 points. That's the kind of trading you have to do, that, you gap down, you buy, and once, it gets into the money, you take it off. As far as...
Ashwani, on the Nifty and the Nifty Bank, just taking that point forward, you'll press the Axie now. Will you look, at that the Nifty takes off, moves towards maybe the 10,670, 10,700 odd mark. The Nifty Bank, would you bet on it?
I would think, 25,700 should be a fairly logical target on the Bank Nifty.
Okay.
Don't get overexcited.
All right.
Okay. I mean, this is still a contracting market. Today is a good day. Like yesterday probably was a bad day. So, once you can't take out one end of the range, you tend to rush towards the other end of the range. So that's what it's about. I don't think this is the big breakout, but the market is kind of sideways and maybe needs stronger macro triggers to move. As far as individual stocks are concerned, Tata Chemicals is a buy with a stop of 770. Target of 805. CG Power is a buy with a stop of 94, target of 106. And SREI Infra is a buy with a stop of 106, target of 114.
Okay. All right, Ashwani, thanks for those calls. Things are kind of moving now. I mean, those indices, as we just saw in today's, looking better. Adani Ports is a stock that's now on the move, 1% up on that one. Additional buying on Infosys continues, fresh highs for that stock as well. Rajat Bose with us as also, as promised. So, Rajat, do give us your trades, and I don't know, do you have a index call going as well, either the Nifty or the Bank Nifty?
Well, Bank Nifty, I also expect quite a bit of short covering, because initially at the morning, I saw call writing was happening around 25,600, and those call writers and those short sellers, they will come in for covering. Already covering is happening, and it could actually accentuate. So we can expect Bank Nifty to scale up to something like Bank Nifty futures. It could scale up to 25,700 as well. And the index, that is Nifty, if it were to sustain above, say, 10,659, then we would make a beeline to scale up to something like 10,685 to the eventual target of mine of 10,707. At least in this upswing, that is the kind of target that I hold, that it would scale up to. Regarding the individual stock calls, I have one bank, one paint stock, and one platform company. Axis Bank, it has actually posted a low, intraday low around 553.50. I use a stop loss of 552.80, and my targets are 560 and 563. I expect Axis Bank to scale up later in the day and meet those targets today itself. Asian Paints, I would put a stop loss below 1175, 1197 and 1203 are the two targets. And finally, Just Dial, disclosure has it that I personally hold some stocks of this company in my investment portfolio. I put a stop loss at 583 and targets are 599 and 610.
Okay, all right. Keep an eye out on the markets. Well, we are moving higher thanks to a couple of these big boys. Infosys, just take a look at that one. That's moving very, very well. Guess what? The stock is at a 52-week high now as we speak. I remember so it would be in August 2017. The stock hit around 860, and from there it's given you good money, actually.
Phenomenal. And I remember the whole sort of confusion, and Nigel, you were pointing out this as well. The big question was that once this buyback business is over, can the stock still sustain? And
absolutely.
it has.
And so, it has, absolutely. It's definitely had, in fact, the stock was at around 900 rupees or thereabouts when they announced that buyback, 1,150 rupees. It's moved well. You pull up a last 3-month chart, you'll see, in fact, the stock has moved well. But I don't know whether we have Ashwani still with us. I think we do. Okay. Ashwani, I want to ask you about another smaller stock, Eros. That's been a big underperformer fundamentally. I've tried a couple of times, but I've struggled to understand the fundamentals of the business. The stock in the last 1 month has moved pretty well. Does it have more to go there?
See, basically, again, one of those stocks which hasn't done anything in this mid-cap bull market, and now we could get back towards 300, 305. Similar to Aban. Suddenly stock wakes up and starts moving higher. So that way, it's a trade, but it's not in any kind of great bull market.
Okay.
All right, fair enough. Thanks, Ashwani, so much for all those trading calls.
And the Nifty has virtually moved to the high point of the day, so pretty good news. Bosch, that's corrected, close to 20% or a little more than that from the highs that we saw in 2017. That stock's doing well, actually, of late. It's up by close to around 5-6% in this month. It's moving higher as we speak. And Adani Ports is the other one that suddenly has woken up. So just keep an eye out on the couple of stocks along with others like Infosys that comes out with its set of numbers tomorrow. Keep an eye out on all these stocks. But talking about earnings, a whole host of earnings are expected all through today. Let's start off with one of the big ones, tech major, TCS. That reports its set of numbers. It's due post-market hours. Anisha is tracking that counter very, very closely. Well, Anisha, what are the expectations this time around?
It's actually a seasonally weak quarter, so the expectations are a bit muted, but the stock movement is actually telling you something else. The street is factoring in a lot more. Let's see whether the company is able to live up to that expectation or not. But in terms of the numbers, I'm expecting a rupee revenue growth of 1.4%, a dollar revenue growth of around 0.9%. The profit is expected to remain flat because the other income is expected to come down a bit. But the positive surprise can actually come in on the EBIT margin front, because that is where we are expecting an expansion of 70 basis points to come in at 25.7%. That because there'll be a bit of normalization when it comes to the wage hikes, as well as operational efficiencies should flow into this quarter, and that's why we are expecting that number. Keep an eye out on the margin also, because the company has given a long-term guidance of 26 to 28%, but they're still below that 26% mark. So let's see whether they inch closer to that or not. In terms of constant currency, we're working with a number of 1.1%. Now remember, for TCS, they have been talking about a turnaround being seen in retail, but they also mentioned Q3 seasonally weak, so don't expect much from that. PFSI, they haven't been too gung about that. They have been saying that they don't know whether it has bottomed out or not. So commentary on that will be very important. Commentary becomes also important because this is beginning of 2018 and the budget of the clients get decided. So any word coming on that will be important. They recently signed some big deals in the insurance space, and that was looking up. So a word on that, and other large deals as well. Lastly, just keep an eye out as far as the realization is concerned, because that has been coming off in the last couple of quarters, and the street, it looks like, is probably waiting to hear something on the restructuring front, because all of the Tata Group companies were buzzing yesterday. So let's see if we hear anything else on that front or not. But overall, if you look at seasonally and if you go by the analyst expectations, they look a tad bit muted. Back to you.
Okay. All right, Anisha, thanks very much for that. So we are gearing up for all of that action. TCS, 5 p.m. onwards. We will, of course, keep you posted and get you the analysis as and when the numbers trickle in. Okay, the other major number of the day is going to be from the banking universe. IndusInd Bank all set to report. Abhishek is here with the expectations. Abhishek, I mean, we've come to expect some good numbers, steady numbers, no NPA problems from this bank. Is it going to be a repeat of the same?
Well, hopefully it will be a repeat show for IndusInd Bank in terms of steadiness in their portfolio. So loan growth between 23 to 25% will be very positive. Remember that, Ashok Leyland had a CV sales growing by 42% in Q3 on a YOY basis, and Ashok Leyland's trucks are financed mainly by IndusInd Bank. So overall, the CV portfolio forms around 17.5% of the book, and that's a high-yielding portfolio. So the high-yielding portfolio driving the net interest margin above 3%. 3.8% will be very positive. Asset quality expected to remain stable. So gross NPA below 1.15% will be very positive. Last quarter, it was at 1.08%. Credit cost, that is provision for NPA divided by advance ratio, for the quarter below 20 basis point will be very positive. Last quarter, it was at 17 basis point. Our polls suggest an NII growth of 22%, which is at multi-quarter low, while the net profit to grow at 24%. Back to you.
Okay, all right, Abhishek. We'll wait by for those set of numbers. By the way, the Nifty continues to move higher. 25-point gain is what we are seeing. So good news, but just keep an eye out on a couple of stocks in the broader markets. Fortis Healthcare. The stock had a good run, remember, but suddenly, in fact, we are seeing some selling pressure. It was already down close to 4-5%, but it's moving lower. Now it's down 6.5%, so keep an eye out.
Good, by the way. Things are picking up 23 points higher on the Nifty, but we'll talk more about the movers and shakers on the index in just a bit. Let's complete the earnings roundup. And Shree Cement is the other one, where we were looking at Q3 numbers today. Nigel, what's to be expected? I remember you were telling us about how those, petcoke costs were a huge, coking coal costs, I think petcoke costs were a huge concern after the Supreme Court order. So is that going to start showing up in the numbers this time?
That's going to be showing up, Surbhi. And, I've been tracking this company for, close to more than half a decade, actually. And I've never seen Shree Cement come out so early and disclose their numbers. They're coming out first really from the cement pack and much, much earlier than they normally do that. So just, telling our viewers, let's see what comes out of these numbers. Is it only the numbers? We'll get to that in a bit. Well, in terms of numbers, it'll look good. Demonetization, that is in the base year. So the numbers will look good on a year-on-year basis. That'll look pretty good. Top line, there'll be good growth because of cement volumes. But as you said, freight costs have moved up. Petcoke as well, or their energy cost really will spike up as well. But let's start with the top line. Top line should grow by around 24% approximately. That'll be held by volumes. Volumes should jump up by close to around 10%. Why is that? They have a favorable base, that's the low base, and also they've expanded capacity in East India, and they've gradually been moving into the East Indian market. So that's really what will help them on that front. What could be a bit of, a dampener could be the lack of sand availability in certain places like Rajasthan and Bihar where they function. That could be, a bit of a spoil sport. Well, realizations, that'll be higher on a year-on-year basis. That'll be good, but it'll be a battle between higher realizations versus higher energy costs. Because as you said, petcoke prices moved up and then there was a partial petcoke ban. And Shree Cement depends on almost all their fuel requirement is from petcoke. So just keep that in mind. And that's what could hurt their operating margins. Margins could see a bit of a compression of around 150 to around 200 basis points, very, very roughly. Motilal Oswal, they give us a EBITDA number that they're working with. That's around 8 crores. But in fact, the PAT number should jump up by around 13%. But is there something more in store? Remember, Shree Cement is moving from 29 million tons to around 40 million tons. We know that. They have a strong balance sheet. There's no debt whatsoever. They have cash of more than 4,000 crores. So some inorganic growth is very much possible. We're not saying it can be announced today, but that's definitely a possibility. And in fact, the EBITDA numbers for the next couple of years as well are up for you on the screen. But so, we put this question to the management in the middle of 2017 or the second half of 2017. Is there something likely in terms of inorganic growth? Let's hear out what they had to tell us. The high point of the day, we're moving higher as we speak, 10,665. The Sensex as well, it's on its way to that 35,000 mark, 34,550. Keep an eye out on that mark. And big boy, Infosys, that's the big one that's moving in there. Ahead of its numbers, dream move. Remember, it was already holding in the green. And now it's moved to the high point of the day.
Just wanted to point out, TCS is saying, if this is an ID party, you cannot keep me out of it.
Yes.
Stocks moving from the lows
I want in as well.
Yes, absolutely.
It seems that's the cue that's coming in from the ID stocks. But let's shift focus for a tad bit. Manisha Gupta is with us. Manisha, you've been bringing us all the good news in the last 1 year in terms of commodity stocks. Today they're taking a bit of a break, it appears.
Oh, well, not at all. Thursday, I bring you more good news on the stocks, maybe, yes. Yeah. But, I'm getting your coffee cheaper yet again for this year. The reason that the demand has been going much higher is because the production has been higher and demand every minute has been increasing from Europe especially and the emerging markets as well is what the data shows. The good news, of course, is that the coffee prices, which closed at an 18-month low in December 27, have seen some consolidation coming in. But you also are looking at 2017-18 projections right now, and that tells you that the coffee production in the global markets is trying to hit a record highs this time around. Of course, the numbers do vary depending on what agency you're looking at. So the International Coffee Organization says that they are expecting the coffee output for the next year at 158.8 million bags. The US Department of Agriculture is putting that number to 159.9, which is even higher. Society General is sticking to 156 and Citi is talking about 152. So whichever way you look, you are looking at higher production year-on-year basis, especially when it comes to those global agencies there. Indian output, of course, has seen a bit of a pressure, but this year the estimates are that you are looking at a higher output here as well of around 5.8 million bags. So good numbers coming in as far as the coffee output is mentioned, but the consumption also is expected to increase as we get into the new year. But let's also get in now. Rupa Mehta of Smriti Commodities. She now joins us with her strategies on the other commodities as well. Rupa, hi. Let's start with the crude oil prices first. And it's a second straight week in this year when we have seen gains come in.
Yeah, good afternoon, Manisha. See, crude oil is showing fast in the domestic market today, but some correction is seen in today's market. But in the international market, small trading. However, prices have remained at near 3 years high, supported by a surprise drop in U.S. production and lower crude inventories. And oil markets have generally been supported by a production cut led by the OPEC and Russia. That started in January last year and is set to last through 2018. And so we are recommended to buy crude at every dip in the February contract around 4,000 with the stop loss of 39.50 and the target would be 4,080.
Rupa, what are you doing with the metal space now? Because we've seen buying come back. Every dip is getting bought into when it comes to many of these metal prices. Multi-year highs is what we are seeing there. Anything that you have a bias against?
Yeah, if we talk about the metals, then definitely we go for a gold, buying in gold, precious metal due to weakness in the dollar. Gold is rising and its prices have remained at 4-month high. So sudden drop in the US dollar against the Japanese yen triggered a spike to the upside in gold. So the dollar has been under pressure against the Japanese yen. So we recommended buy gold around 29,250 with the stop loss of 29,100. Target would be 29,500.
Okay.
Okay, all right. Thanks so much, Rupa, and thanks so much, Manisha, for joining in as well and giving us all those cues on the commodity corner. But keep an eye out. Well, the Sensex has crossed the 34,550 odd mark, so that's looking good. The breadth of the market as well is looking very, very good.